everyone. Hi, guys. It's Friday, 19th of November, and it's been a little while that since I haven't published any video, but I think, we've had a very interesting week in the crypto market, and I wanted to basically have a little bit of summary of what I think is about to happen, and a little bit of like a warning notice from some of you guys who might have been a little bit too complacent, because I hear that with a lot of people around me, a lot of also some of my students, it's just basically big an unbelievable run in the crypto market that's been doing exceptionally well. But I think that we've seen some turnaround, we've seen some signs in the market, and notably some of the big whales liquidating big position in the past 15 days, and you and I know that these big guys, they kind of like control the game. I mean, as much as basically, we the little guys, we can do well, and on the back of that, these guys, they control the big money, they control some of the big flows, and they decide when they want to exit or when they're going to come back in, and they will set the floor and they will set the ceiling in lots of times. So I just basically want to have a look, and I'm not going to basically look at the Bitcoin or the Ethereum. Obviously, there's been a lot of altcoins that have been doing very, very well. I've been myself in a lot of the Metaverse related projects, which have been doing incredibly well ever since Zook, talked. When was that? Like a couple of weeks ago now, maybe 3 weeks max. I think it was a couple of weeks ago. But you know, the cryptos like Mana, Sand, and all crypto related to the metaverse. As a matter of fact, I can show you. I've got my list of crypto, and I got my list of metaverse stocks that I'm looking at. But these are sort of like the major names in the game. Um, storage, stall, mana. I mean, the one that I've been using, that I've been really active on, was Sen, mana, storage. The three one that I've been basically really, mostly active. And ENJ as well. OMI is one that I've basically been recently involved very much. I think this one is a little gem. I think this one is waiting for its time to start basically really picking up. But so I've been building up a position on that one slowly, and but I think that there's going to be a big discovery at some stage. But that would be for another time. Anyway, I want to go back to thing. This is one of the screen on TradingView that I'm using. It's a split screen between the weekly view and the daily view. You can see, I'm trying not to use, even though the charts might seem quite filled up with stuff. It's mostly moving average that I'm using, and in this case, on the daily, I'm going to be using moving average. I will show you on my crypto that I'm using the 7, 30, 50, 100, and 200 days. At the same time, the yellow ones that you can see there are going to be the weekly superimposed on the daily. So it helps me also to build up a convergence of real support and resistance areas. And for the weeklies, I'm using the 10, 20, 50, and 100 week moving averages. Every time I'm using EMAs, some of you guys use the EMA. I understand it's going to be sometime, especially on the longer ones, some differences, but you got to basically stick with what you like best. I've always been using EMAs for personal reasons, but whatever. I just want to basically be clear. And then the rest is basically volume. Here is the ATR, that I'm using, and here the Elder Force Index, which also is something quite useful that I find that I use for divergence. Here on the weeklies, I'm using MACD oscillator. I've always found the MACD works better usually on the weeklies, on the longer time frames. I mean, you will find some big divergence as well sometimes on the dailies. I thought that the very minimum that I would basically take as a signal would be a daily MACD divergence, but I usually like to apply on the weekly basis because I think they're a lot stronger signals in general. As you can see, starting with the weekly. Um, we've had basically the big run from late 2020 all the way to April, May 21. Then we've had, the big consolidation in the market of almost like 50%, 55% almost, so that's when we marked the sort, we had reached this sort of like level, benchmark level of 2.5 trillion capitalization in the crypto markets, and we corrected all the way to almost 1.2, roughly. Now we've had this consolidation that lasted from May to all the way to end of July, and then end of July, that's when we started the big run up again to where we've been recently, and then we reached that also benchmark number, or so run number that I think a lot of people were waiting to look at, was the $3 trillion dollar market cap for the entire total crypto market. Since then, we've seen a lot of big players, a lot of big whales coming out of the market. We've seen, like, in the big transactions going through the blockchain in the past couple of weeks, and I think it starts reflecting, I think. Right now, the last Twitter that I sent, I was saying that basically we were reaching areas that were quite key in terms of support, and we've seen like some bounce, definitely in the market of that. I've been playing a bounce on some of my favorite cryptos, like I said, Metaverse, and also on the non-Metaverse related project. I've been playing AVAX, FTM, what else? Again, Solana, EGLD, these sort of cryptos that I've had interest, sort of like long-term position in. But definitely now I'm getting some mixed signals on the market, and I think that it is important that we review that together. And obviously, I'm always very curious to see what you guys think about that. But I want to show you something that's interesting. So that was the move that we've had, like from almost like beginning of January to the old peak in, like I say, April, May 2021, and that was basically for a move of about 200%. Okay, that was basically sort of like big move that we've had for, lasted about 100 days or so. And see, since basically the bottom that we've had also in the month of July till the recent top, we've also had about 150%, let's call it, 150%, also for about 100 days. And we're starting basically seeing some correction in the market. I want to show you that, let's isolate a little bit of the, when we reach this 2.5 trillion market cap that I was telling you about, that was kind of like a very representative number, round number that a lot of people have there in their mind. We started looking at the market every time was bouncing very much on this convergence of like moving average daily 50, and every time we'd had like the moving average 10 weekly, and every time we had this sort of convergence, we had a good bounce. At this stage, we had another good bounce, and then we can basically reestablish a new high, and that's the day when we started trading right below the moving average 50. And at the same time, what I didn't like back in May was that the fact that we had like these big conversions, bear divergence in the elder index. And as you can see, we were making new high, and at the same time, the force index was just keep on going down. You have to understand that the force index is a very interesting index in the sense that it takes two main factors that should be the main factors that we consider every time that we do our technical analysis. It takes price and it takes volume, and both basically represent a very psychological, level of exchange for all traders, but also basically representing how much implication of those traders, in terms of volume that is going through. So, this index is something that I like very much. I just generally like Alexander Elder because I think, it's always had like great. It doesn't have that many, of his own technical analysis tools, but the few that he's using, I think that I've always found in the past very useful. And that's the first basically big correction that we've had in May when we reached the moving average 200. From there, what happened is that if you remember, we had a decent bounce of about 50% in the market. Okay, but remember that first, before we're getting this movement and then the whole movement, the whole consolidation that entered, and we stayed for from end of May to end of July on that sort of range, maintaining the lows of the market before we started, like end of July, started going back up again. Um, once we had gone once we had gone below the moving average 50, and once we've had like basically that big red candle, that was kind of the end of it. We were basically, every time there was a conversions downs of all the moving averages, and but more importantly, we had like a few indications that the market was on the brink of a turnaround. The fact that we had some of these big daily candles, red daily candles, and we had also diversions in the force index. Now, going back to where we are today, and I want to basically, I will go back to this area where we had found again good support at the end of July on the that's moving average 50 here on the weeklies. Okay, very important. Okay, moving average on the weeklies landing support. And then again, when we started the rally again towards the beginning of August, we had an up convergence, trend convergence of all the moving averages that was great until now. But if you see again, we're seeing some signs for the past few weeks now, again in the Helder Force Index, that the price are going up, but at the same time, with it's not being represented on the Elder in the Force Index, and especially when we've gone through the zero line, which is never basically a good sign. And now, what I didn't like in the past few days was this first big red candle on the dailies. And the fact that basically, even though we bounced on the first moving average, 10 weekly, convergence of moving average 15, moving average 10 weekly, which was a good support, we had a little of a bounce these past few days. I've talked about it on some of my Twitters, and I acted upon it on some of these crypto that I've mentioned before, but I haven't been really impressed on that so far. Obviously, I don't want to basically talk about like a big bear market or anything like that, but I want to basically to understand that there might be a possibility, a strong possibility, that we end up not being able to go back up above these 2.6, 2.7 trillion market cap, and we basically get stuck under this moving average 7 and 20 on the dailies, only to basically go back down, but this time, find these very big candles that will try to look for support around the 2 trillion, maybe lower, maybe around the 1.8. That would be, in this case, if we look at it, something like in between 30% correction or about, 40 something percent correction, which would be in line with the sort of correction that we've seen in the past in the market consolidating. Another thing that I want to show you is that on the weeklies, if you see also, like I said, I like to use the MACD divergent signals better on the weeklies because they're a lot stronger signals, generally speaking. But here you can see, in terms of this oscillator, we're seeing a big divergence between this high that we've established in May this year, 2021, and the new all-time high that we've established here in November 2021, at the same time not being represented in MACD. On the weeklies, usually these are very strong signals. So again, looking at where we were recently around the $3 trillion mark on the market cap, we found first good support around moving average 10 weekly. Probably there could be also some kind of like little bounce on the moving average 20 weekly, but the big area will be around here, the 1.75 trillion mark, which would correspond to MA 50 weekly and also that bottom. This I'm going to mark it down on this so that you can more realize and establish. So that's this area. And at this stage, I'm not going to basically go all weapons out and say, this is the catastrophe, this is what we have to expect. But I'm being very prudent, and that's why I've been cashing out on a lot of my long-term position. I'm playing every time like some of these pounds on these areas of conversion that I've just shown you on the dailies, but I'm being a lot more careful. And I see a lot of people on the social media, and I'm sure that you guys have also spent time on the social media looking. A lot of people, it's always the same story. There's a lot of people that are betting the house, or being way too much leverage using futures, or even if they're not using futures, they might be using the spot facilities on most of the broker platforms. But even so, they will be still putting too much money in relation to the available equity that they have. So this video is basically to tell you that I'm suspicious about these big candles that we've seen recently. The fact that we've basically started having these down conversion. I'm not basically saying that it is the end of the bull market. I'm very much in favor of uh, the big picture is basically, I think that blockchain technology is going to be there. Some of these projects out of these 13,000 cryptos projects that are out there are going to do fantastically well, and we're going to have like many other projects like Solana or the likes, doing 200 times in 1 year, having like 10, 15%, 1,000% performance. I'm just saying that right now, the overall market, total dollar cap, and taking the big benchmarks like the Ethereum and Bitcoin, we're seeing some outflows. We're seeing some other big guys are going out, and it's always a signal for me. On the technical side of things, I don't like the way they start looking at. I think that maybe if we start basically being able to go back up this sort of level of 2.67 trillion, then it will indicate me that okay, it was a mere simple correction, and then we can go back up. But keep in mind that it's the end of the year. A lot of institutionals and non-institutional are willing basically to get rid, take some profits out. Some for tax reasons, some for other reasons. They need the cash. But I see a lot of people in the social media just basically investing way too much, at least from what they're saying, what they seem to be saying, investing way too much compared to what they should be investing. So they over leverage in general, either by using futures or using spot in comparison to the equity that they have or the availability of cash that they should be using in the crypto market, thinking that basically this magic crypto market is going to keep on basically printing 200%, 300%, 400% all the time. Understand that when we got to that level in between the month of end of May and July, in that period of time, we had been correcting quite a lot. We were on big support areas on the weeklies. So this is where you had to be more um, uh, definitely more aggressive in terms of the size that I wanted to put back in. And let's say that you have a portfolio of $10,000 that you wanted to invest to the crypto market. I would have said that around that time, that's when you had to basically put up the weight, and weight more on that portfolio, meaning you would have to basically be invested 60, 70, 80% of it. But the more that we've been reaching all-time high, and especially reaching like that magic number, $3 trillion market cap, the more that we have to be concerned, and you have to be definitely more prudent on your allocation. So on that pocket, you should have basically taken money out all the way up, and now you should have maybe a 10 to 20% left on your portfolio, on the overall figure that you have in mind investing. All right, so I just want to wrap it up, but I hope that basically was useful, guys. Leave any comments if you have, and always remember, respect your risk. See you around.